So we are back in the twilight zone again, and let's say I need help from you and I want to repair relations. But here's my plan. I'm gonna say we have to work together. I'm gonna say we have to communicate more. Then I'm gonna scold you and demand your obedience. I will ask you to do A, B, and C, or else I'll take action. And this is what happened during the meeting between Yellen and China. We are reverting to the good old US playbook of holier than thou. This is bizarre diplomacy. This is not how the Chinese operate. They will simply smile politely but ignore you. In our lead story today, Yellen says the US and China needs healthy economic relations. It's the same old rhetoric of we are not decoupling from China. Let's hold hands and work together for the greater good. But here's the spicy stuff. She's also accusing Chinese firms of supplying Russia with equipment in their war. She wants Beijing to crack down on Chinese firms assisting Putin's war efforts in Ukraine. According to Yellen, she has seen the evidence, she has seen information on Chinese companies and banks facilitating the flow of equipment to Russia. And there are going to be significant consequences. But let's get real here, right? China probably isn't going to do anything because it's a really slippery slope if they cave in now. They will lose face on the world stage and break ranks with the Russians if they did. And there's a reason why Yellen is bringing this up now. It's because she knows sanctions on Russia aren't effective. She has thrown the entire book of sanctions on Putin and nothing is working. And here's her complaining. We are concerned that in spite of sanctions programs that we have put in place, equipment that's critical to Russia's military effort is still evading sanctions and being delivered to Russia. There's a big problem with US sanctions, especially from China's perspective. You are asking them to damage their economy so that America will benefit. Beijing has seen what has happened to Europe, right? Especially Germany. No good deed goes unpunished. Just look at the latest tax sanctions on China. The US State Department has announced they are moving to curb advanced AI chips to China. Companies like Nvidia are developing new underpowered chips for China just to comply with US sanctions. The US is forcing their own companies to sell weaker technology to China, and it's moves like this that are pissing off the Chinese. In fact, we have a US official boasting about how export curbs are all about impeding China's chip progress. It's all about containing their economic advancement. So if you're China, you know you're getting a raw deal. Whether you help Yellen or not, you're still getting punished. So what's the point of complying? This meeting is just a primer for Biden and President Xi's face-to-face on Wednesday. Yellen, she's trying to lay some groundwork, but she'll probably pave the way to economic hell. And let's think about this for a bit. Why is Yellen suddenly on a sanction enforcement spree? Well, that's because the US economy is on really shaky ground. They are fighting two wars and burning tons of money in the process. They've given Ukraine $100 billion and there's another $100 billion in the works as well. Israel needs their money as well. Yellen is trying to tighten the screws on Russia through enforcing sanctions because she can't afford to keep borrowing money to fund Biden's adventures. The US Treasury is facing rising yields with every new bond auction they do, which is terrifying Yellen. Plus, Jerome Powell is still signaling more potential rate hikes to push inflation down to 2%. The Fed rate hikes might not be over yet, and things just took a turn for the worse. The 30-year bond auction was a catastrophe with yields spiking up. Buyer demand just isn't there because the whole world knows that US deficit spending is out of control. And here's how bad the auction was. Dealers had to step in to buy bonds at a discount. Foreign central banks took only 60.1%, down from the average of 68.6%. And this is forcing yields up, and analysts are all calling the auction as terrible and ugly. And this is where we need to connect the dots with the Middle East crisis. Yellen is in a big crisis today. She needs new buyers for her bonds, but China is no longer buying. This is a big problem for US treasuries because Beijing is no longer around to save the day. In a story from Bloomberg, the rapid bond rally is looking fragile. The treasury market recorded its worst day in 6 months. We saw US bonds rallying in price over the past week, but that is now reversing. Treasuries booked the biggest one-day loss of 0.8%, which is a tremendous move in 24 hours. The collapse is continuing because investors they realize that not only can rates go higher from Jerome Powell, but Yellen is still flooding the market with bonds. This borrowing nightmare is not going to stop. Yields across the board have gone up. It's not just the 30-year duration, everything from the 10-year bond down to the 2-year note. Investors they are demanding more returns to take on this risk. The world isn't buying Yellen's BS. They know government spending isn't over. In fact, it's going to keep exploding now that we have a crisis in the Middle East. The House and the Senate, they are fighting with each other on war funding, and it's not about whether they'll give the money or not, but how much more money they should throw at Netanyahu and Zelensky. Let's focus on Israel for a bit here. This will illustrate how deficit spending is only going to head up and not down. Israel is going to get their $14.5 billion sooner or later. But it won't stop there. America has already given them over $120 billion over the years. And this amount has been going up, and we are now at nearly $4 billion a year. We aren't even adding in Ukraine yet, which the Democrats want money for as well. Netanyahu talk about occupying Gaza while fighting a multi-front war. We also have threats of escalations happening every single day, so that $14.5 billion could very well turn into $145 billion in an instant. So Yellen is coming to the meeting with China with a horrible hand in poker. She's trying to bluff China that she's holding a royal flush, right? But all she has is a pair of trees. This isn't going to work. She's in an alternate reality. She's in the Twilight Zone. She's in another world while China is on planet Earth. They can see through the sanctions warning, right? And here's what Yellen said during the meeting with China's economic czar. She basically gave an order to him. We would like to see China crack down on this, especially when we are able to provide information. And if Beijing doesn't take action, America will slap secondary sanctions on the country. Now, I believe China won't take any action other than giving lip service because it's a slippery slope. The moment they comply with this, it will cascade even further and Janet Yellen will ask for more. It's the good old adage of give an inch and they'll take a yard, they'll take a mile. If China falls for this, Yellen will ask for sanctions enforcements across the board, and the next insidious request will likely be on Iranian oil. The US is pushing for a bill to tighten sanctions on Iranian oil. It has been passed by the House and will probably get signed into law very soon. And once it happens, America can start sanctioning buyers and importers of oil from Iran. And guess who's the prime target? It will be China. Beijing is buying more than 90% of Iran's oil exports. Iran is more or less China's exclusive supplier, and the discounts are insane. China isn't going to give up such a good deal. We are talking about a discount of $13 a barrel versus Brent. That's a 16% discount today, which is a phenomenal advantage for all of China's refineries. With such a wide margin, you can refine crude oil and sell oil products to the world, to places like Europe where there's an energy crisis. You'll be making a ton of money. Chinese imports from Iran have been growing year after year as well. It's now at least 1 million barrels a day. That's $13 million of savings a day, or nearly $5 billion saved in a year. The US sees how badly their sanctions are backfiring in real time and how China is winning from them. Yellen is laying down a trap to get the Chinese to commit to sanctions enforcement before widening the net further. Most of these companies supplying Russia operate within China itself. The trade likely is done either in rubles or the Chinese yuan, not the US dollar. Even if Yellen slaps them with financial sanctions, they are useless. That's why Yellen is complaining to China and asking them to take action. But if Beijing falls for this, it will undermine their entire trading network, not just with Russia, but with other sanctioned countries like Iran as well. China has been buying a ton of oil from countries under US sanctions for the longest time. Since the start of 2021, China has been importing over 1.5 million barrels of crude from Iran and Russia. They ramped up imports once the conflict in Ukraine started. It hit as high as 2.8 million barrels. And these are discounted barrels of oil which China needs to grow their economy. And this is a big factor why they have managed to dodge an energy crisis while the rest of the world is still struggling with one. And let's talk about China's issues with US relations, right? Especially when it comes to the economy. Now, even before the meeting happened, Beijing laid out a list of their grievances before the United States, and it all centered around US discrediting their business environment. And they are taking offense to three things. The first is Gina Raimondo telling US companies that China is uninvestable. Secondly, the lack of a level playing field for Chinese firms investing in the US. And finally, the sanctioning of over 1,300 entities. The US is still the world's hub for investment and the biggest economy. So when President Biden or his administration calls China uninvestable, it has a material impact. Like all other countries, China welcomes foreign investment, helps companies grow and expand their operations. By saying China is uninvestable, America is keeping capital locked away from the country, locked within the United States. If investment money isn't flowing to China, it's either going to stay in the US stock market or the bond market, and that keeps US stocks overvalued and drives demand higher for US treasuries. And this rhetoric is starting to take effect. According to Reuters, China recorded its first ever quarterly deficit in foreign direct investments or FDIs. The direct investment liabilities came in at minus $11.8 billion, which isn't good. More money is leaving China than investment going in. And this is slowing down the progress of Chinese companies and elevates the cost of borrowing. We can see this big collapse of net foreign investment into China. Since 2022, when the talk of decoupling began, investments started to drop away. Inbound investment into China went from $100 billion a quarter down to below $100 billion, and this is causing an overall deficit of investment dollars for Beijing. Investors were essentially spooked, right? What if the US stops buying stuff from China? What if they shift their supply chains away from Beijing? Money doesn't like uncertainty. If the perceived risk is too high, even a big reward, a big return won't be able to stop money from leaving the system. The same way why money is leaving US bonds today, because the risk of Yellen flooding the market with T-bills is high. It's the same thing. And this is one big concern China has with America's decoupling agenda. It is having a real impact on investment money flowing into the Chinese economy. So unless Yellen takes steps to address this, I don't see US-China relations improving, at least on the economic front. Everything we see today is a song and a dance, but the underlying hostility hasn't been resolved yet. So I'm not exactly hopeful for the Biden-Xi meeting. This is probably going to be a grand waste of time. The US won't pull away any tax sanctions on China, and I don't see Joe Biden scaling back on his decoupling talk. China also sees weakening US influence in the Middle East, and I don't expect Beijing to suddenly support American sanctions on either Iran or Russia. Biden himself is freaking out over the idea of China opening a military base in Oman. He is confronting them about it because it means further competition in the Gulf. And there's a reason why US has such a big presence in the Middle East, right? It's all about oil. And now that China's establishing a beachhead there, this is making Joe Biden sweat. You combine this with the fact that he's getting destroyed in the polls, this US-China meeting is just a stalling tactic. He wants to put China on ice and in limbo until the Middle East crisis can be settled. Now, I want US-China relations to improve as well, but this meeting will be one big non-event. Nothing substantial will change. But let me know what you think in the comments below. Will China obey US sanctions? And what does Biden want from the meeting with Xi? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.